Hey guys, my name is Marley Presswood, and I'm a realtor over here in Charleston, South Carolina, and Mount Pleasant, South Carolina. In today's video, we're going to go over the market stats of what happened in Mount Pleasant in December 2022, and kind of go over what we should be expecting in the next 12 months. So the first thing that people care about the most is how much people are getting for their house. So from your list price to your sold price. At this moment, we're getting about, on average, 93% of the original purchase price. Now, I do want to let you guys know that when a home closes, a seller can also do a buyer concession. And we are seeing a ton of buyer concessions. Right now, over 35% of homes that closed last month did do a seller's concession. A lot of them we were seeing around $10,000, but we saw up to almost $50,000 in seller concessions. Of course, at the $50,000, it was, I believe I have it written down, it's a $1.7 million home. Still a ton of money and something that we are not very used to seeing, but the last few months, it is something to get used to. If you were a seller, for buyers, we're seeing a lot of $10,000 ones for a 2-1 buy down, for your interest rate buy down, and a lot of repairs. There's a lot of opportunity out there for buyers. And also, I would take into consideration this 93%. What I am seeing a lot is that sellers and agents do not realize how quickly the shift happened in our market. Affordability went up to the skyrockets. So people were listing their homes like it was, January, February, March of 2022, when that's not how the price appreciation was happening anymore. We saw an average of appreciation this year of about 18%, when we're used to seeing about 5% year over year. So this 93% to me means that, people are listing their houses like it how we used to. So like if your neighbor sold their house for 500,000, 3 months later you're selling yours for 550, no problem, multiple offers. It's just not happening anymore. So sometimes sellers are like, hey, you know what? Let's just try it. And when you do that, there's a few bad things that can happen. One, you can sit on the market. Two, you get a bunch of low balls. Or three, you just sit on the market. So right here, the 93%, I don't think that this is anything to be concerned about. This is just seller expectation and realtor expectation, working out of all the kinks of, what we're used to seeing over here. Oh, sorry, over here. So this is obviously in 2021. Sellers were getting a great deal of their purchase price, up to 1.2%. And then let's just go ahead and look at like what a normal market was. So 2019, I actually don't consider a normal market. It was actually a terrible year in real estate in Charleston. It was just very flatlined. The price appreciation was almost at 0%. It was just a funky year. But if you look over here, in 2018, it was 93% is pretty normal. We saw a lot of 95, sometimes 97%. So really do not be shocked at this 93%. It is what a normal market looks like. So let's go back to days on market. So they are getting about an average of 93% of their purchase price. Now, what was the average days on market? It was 33 days, which is up, if you look over here, 120% compared to the year prior. We did see this going up dramatically, and I believe this probably dropped from 40 to 33 just because homes for sale and our absorption rate is lower than it was in the previous months. So 33 days, also to me, this is not anything to be concerned about. By the way, we are going over just residential, pre-owned, single family detached homes. No foreclosures, no short sales, nothing like that, just a regular traditional sale. So average days on market for 33, yes. Is it shocking compared to what we were used to for the past 2 years? Of course. Is it something to be nervous about? Absolutely not. Because if you look over here, it took us about 2 months, a month and a half to a month to sell a property. And this was still a buyer's market over here in 2017, 18, 19. So just, time on market is what's going to take for a home to sell, and we're just getting used to it. So month supply, how I said that there was a big dip, we did have a month and a half worth of inventory. What we're used to is over here about that 3.5, 4 months worth of inventory. we were still in a seller's market. It was a very healthy seller's market. And when we go down over here, we were working with about 2 weeks worth of inventory at any given time. In this time, there's a ton of studies out now that over 65% of homeowners that purchased in the last 2 years are unhappy with their purchase because they felt like they had to compromise way too much of what they wanted. When I'm helping a buyer, I always say, we're not going to find a home that fits 100%. We're just not. But we will find a home that fits your house or fits your needs at 85%. And that's where the compromise typically goes. But in the last 2 years, we were seeing people, 50%, 65%. They were just looking for a house. When you're working with 2 weeks worth of inventory, you will do anything to get a house because there was no rentals out there. There's no homes in the market. So now people are able to take their time, look at a few houses. You don't have this one home to look at anymore. You do, as a seller, you have competition out there. So you do have to make sure that your house is in show-ready condition and will fit all those buyers' needs. So right now, it dropped a little bit. If we look at new listings, our new listings dropped dramatically too to 36 new homes in Mount Pleasant last month. So obviously our month supply is going to drop a bit. If you look at the previous years, the winter, we always have those lows. So December, December, December. So it's normal for us to see this drop. We have not seen this drop in the last 10 years to this low, which is a little bit concerning. But with that spike in interest rates, I feel like a lot of people took a halt with the home buying process. And it's very natural when something that uncertain happens to the market where you'll see these dramatic drops. Obviously, right here, these are all June to July. That is where most of our sales will happen, is in that spring, summer session. That's where we see a ton of homes being sold. So let's look at, what should we look at now? Shows depending. Shows depending is something that I think that you should definitely look at when you're thinking about purchasing a home. This is how many showings is your house going to be getting before it gets under contract. So it's easier to look if you look at the last 2 years. So this is the last 3 years right here. And during the 2020, 2022, we did see, a ton of showings. And that's because we are all standing in line waiting to look at houses. So there was so many showings that probably didn't even get booked. It does not include open houses or anything like that. And then all of a sudden, June, we dropped to 11. Something did spike us in November where it's 19 showings. But now we're dropped to 12 showings. So 12 showings typically means that it will take you 12 showings in order for you to get your house under the market. The difference between this 12 and this 14 is in August 2021, the days on market was a lot shorter. So now it's taking about a month to a month and a half for you to list your home or for you to have a contract in your home. But these 12 showings are dragging out for over the month, when over here in August 2021, if we look at the days on market, where are you? It was 8 days. So you're getting 12 showing or 14 showings in 8 days compared to our 12 showings in 33 days. So sellers and agents are feeling like they aren't getting enough showings, but again, it is very normal. It's nothing to be worried about. Let's see if we go back to the 10 years and I can kind of show you. This was 15, 16. So it's still, if we go back to pre-COVID, let's just forget about that market. What is normal? What we're seeing right now is us just going back to our normal market. Are we going to crash? I don't have a crystal ball, but I'm just following the trends and seeing what's happening. Obviously, we're going to be watching this very closely, but for me right now, it looks like we're just going to probably flatline and turn back into a normal market. And that's what I hope. I do think that if the interest rates drop down any more, any type of dramatic drop, all those buyers that got pulled out of the market, we are going to see them come back into the market, and it's going to happen all over again where we have no inventory. So hopefully the feds learned their lesson. You never know. But homes for sale. So we have 118 homes for sale. Something that I thought was very interesting is the amount of expired listings that we had in the last month. So I wrote it down, and we had, where are you? Ah, I didn't write it down, but I think I have it over here. Yeah. So we had 35 homes get taken off the market in the last month. And on average, the median days on market for these expired listings was about 3 months. And then they said, let's call it quits. So expired, temporary taken off the market, and canceled. We had 35 of them in the last 30 days. That's not what we're used to, but also the motivation for sellers could be a little bit different now. They're taking off for the holidays. There's a various different reasons why people take their house off the market. Um, you know, Things change. So this is something that I find very interesting as well, that I hear people always say, like, I'm getting beat out on cash. I'm getting beat out on cash. I'm getting beat out on cash. Well, that is everyone's opinions, and that is what everyone is, that's what your personal experience is. But to me, personal experiences really mean nothing. It really is what is actually happening in the market. So this is from the entire year, and it breaks down in Mount Pleasant the detached homes that were for sale. So how many cash buyers? There was about 21.5% of closings were cash. So did 344 people get beat out with cash? Most likely. And I understand why people are saying that. I've been beat out by cash as well. And I've also had cash that didn't beat out conventional. But right now, like, almost 72% of our entire market is taken by conventional loans. And this is just Mount Pleasant, guys. So the unknown could be various different things, or the agent could have not put in the statistic incorrectly when they're closing out their deal. And then we had about 4% that was VA loans, almost no FHA. Um, but this is very interesting. And then I also have last month's pulled up, where, cash was taking up about 22%. I was very curious what was going to be happening, just because interest rates are a little bit high, what people are going to be doing with their finances. And it's staying pretty much normal compared to even the previous year. So 22% of these closed homes last month were cash, and 70% was conventional. About 2% was VA. I feel like I have gone over anything. Let me look and see, check my notes. I think that I dropped all the knowledge that would be important to you. If you are a homeowner or a buyer looking to purchase in the Charleston area, or just want to chit chat about home values, we do offer these home equity reviews. We launched it out to outside of our clients. So with our clients, we do these annual home equity reviews, and we sit down with our clients and go over basically their net worth of the home and the health of the home. So what's happening in your neighborhood, what's projected to be happening in the next 12 months. And if they're planning on doing any renovations, we kind of help them budget that out based off of the neighborhood. So how much money, what's your max amount of money you're allowed to use on this kitchen renovation that you want to do? So I will pull, all of the comps and saying, based off of the past sales, it wouldn't make any sense to go over this budget in order for you to be able to make that money back. Even if you aren't planning on selling anytime soon, it is good for an agent to get in there and go over everything that you have questions on of your home, to make sure that you're not, doing a renovation that won't make sense, or doing a renovation that's too expensive. Reach out to me. My email is marley@marleypresswood.com, and I'd be happy to come over to your house. We are now offering it outside of just our clients, and offering it to the community now as well. Well, I hope you enjoyed this. Drop any questions that you have below, and I will be happy to explain a little bit more. Hope you enjoyed this video, and talk to you soon.